Welcome to the FarrCast, bringing you insights into Wall Street, Washington, and the world. And now here's your host, Michael Farr.
Welcome to the FarrCast. I am Michael Farr. Thank you so much for joining us again this week. It is the 5th day of June, June the 5th. Here we are in the third month of the second quarter, last month of the second quarter here of 2024. The year's almost half over. Can you believe it? And there's not much to talk about, not much going. Well, actually, we have a fair amount going on in Washington. There's a really kind of important article in the Wall Street Journal this morning. Now, today is Wednesday. We're a day early, but the Wall Street Journal has an article this morning where 45 people have visited in person with President Biden in the past 30 days, and each is reporting concerns that they had with his mental acuity, that he rambles, it doesn't make sense, has good days and bad days. This is a different article, and the Wall Street Journal, remember, is a conservative, at least on the editorial side of things, is a rather conservative paper, so they're not going to be necessarily pro-Biden. We try to just get to the facts here, of course, on the FarrCast. But this seems like a big deal. This seems like something new. So if you didn't see Wednesday's article, and I'm referring to it in the past tense because FarrCast won't probably hit and get till at least tomorrow or the weekend, but look it up online. I think it's important, and I think you're going to see it's the beginning of a discussion that starts to really influence Washington politics, presidential election politics coming into the summer. All right, JOLTS number yesterday. Farr, what is it? JOLTS number, job openings. They were lower than expected. That represents demand for employees by employers. Okay. It wasn't just, you're going to say, well, it was 8-point-something million as opposed to 8.3 million. Yeah, we've still got 8 million folks, job openings out there, more or less. But it is a diminution of demand, significant or insignificant. What does that mean? It means that those employers out there are not going to be fighting quite as hard for those employees. It got as high as 12 million job openings during the pandemic, 12 million. So we've gone from 12 million to 8 million. 8 million is still kind of high, but not way high in terms of historical averages. So that means there's not real pressure for wage inflation, right? If you've got 12 million job openings and only a couple of million or a million folks out looking for jobs, or 2 million people out looking for jobs, they've got to pay more. But right now, with that number coming down, they don't have to pay as much. That's good news for the Fed. This is continuing that downward trend, or should, to support the downward trend in inflation. We've heard from those Fed governors, of course, as they've been jawboning. We're not hearing from them right now because they are in their blackout quiet period. We have heard from them that there's really doesn't look like there's going to be any kind of an easing this year. Maybe December as a one and done, but gone are the talks of 7 rate cuts this year, no matter how desperate Wall Street is to have those rate cuts. And I don't think Wall Street should be, because it indicates a slowing. So more slowing than they want. The economy's actually, in general, okay. Actually, maybe even slightly good. Don't believe what you're hearing necessarily from the impressions of the public. The economic data are expanding. GDP is continuing to grow. Real GDP is growing, or is at least flat, depending on where you're judging inflation. So, with everything okay, markets trading near highs, political stuff here, certainly political stuff abroad, and you can think about what's going on in the Middle East, going on in Ukraine, tensions with China, etc. It's a lot to keep track of. And so here we go with Wall Street, Washington, and the world on the FarrCast. We're going to start with Wall Street this week, and we're going to get to Washington with a lobbyist, a great friend of ours, been on before. Daryl Owen is going to come on. He ran the Senate office for Senator Bennett Johnson of Louisiana. He also ran a House committee on energy, and a really smart guy, a lawyer. They're all lawyers. I'm sorry, I can't help it, but they are. That's what they do in Washington. So we're going to bring you the insights, and we're going to start with Jim Iuorio from TJM Institutional Services in Chicago, the voice of the Chicago Exchange. He's wicked smart, as they say up in Mass, wicked smart, and he knows how to make a good hamburger. Hey, Jim, welcome back to the FarrCast.
Hey, Michael, how are you? Is it college football? Is it Lee Corso who always says, not so fast when someone makes a prediction? So that's what I'm going to say to your economic prediction, because I think things may have changed a little in the last 3 days, which on one hand has made people less worried about inflation, but on the other hand has made people a little more worried about the economy. Okay, consider this. Friday, 1.3% GDP was revised lower. Monday, the ISM numbers came in kind of crappy, but the most important thing is that Atlanta Fed GDP Now model in the last 3 weeks has gone from predicting 4.2% GDP to 1.8% GDP. Now, I mean, 1.8 is still positive. To your point, that's still a growing economy. But what that suggests to me is that things could be changing a little quicker than people think. And I will add on the top of it that the $35 trillion debt, in the words of Billy Joel, is that all you get for your money, is 1.8% GDP. To me, it seems like things aren't as great as some might believe.
You think we might actually see the recession that so many of us have been calling for the last 3 years?
Here's my stack of chips. I am moving that onto the square that says,
oh, look at him sliding the stack of chips forward.
2 months, yes.
What, so wait a minute. What do you mean 2 months? Tell me about 2 months.
Within the next 2 months, I think we're going to start to commonly agree that we're in a recession.
Commonly agree we're in recession. So we're going to have...
Unless they increase the spending, unless they pull out every stop and go further and further into debt, that could provide a little bit of cushion, but my chips are still on that square.
We've already reported on the FarrCast that this year, probably next year, certainly, the Defense Department budget will be less than the service on the debt. And if interest rates go up at all, you just can't keep paying 23% on your credit card and say, oh, well, I'll be fine if those rates go to 30%. No, you won't. And by the way, you're kind of screwed at 23% if you're not paying attention. Pay off those credit cards, folks. Jim, if indeed we go into a recession, what does that mean for this narrowly driven tech market where we've got these 6 stocks that now represent 30% of the S&P 500?
By the way, that I don't like the fact that it's gone from, I mean, it was the big 6. Now it's essentially the big 1, but still let's pretend it's the big 6. But anyway, so I do think as the economic data, so just the last 3 days, Friday, Monday, Tuesday, we got bad economic data. Historically, the stock market would have been jubilant saying, well, now they're going to ease more. That's not what happened any of those days. So no. I think they feel we're on the precipice as well. So I think what happens to equity markets is that as soon as the data flashes red, the stock market has a quick sell-off. It often does. It's like a kind of a 1-2 punch to the Fed saying, okay, you think the economic data is bad? Now the wealth effect is in reverse. You guys better do something quickly. And it usually pushes them off the sideline. I think it will. I think other things.
You think it will push them off with $6 trillion in money markets out there? You think the Fed's really worried about the markets really heading south?
Here's my answer to that. On May 1st, they reduced quantitative tightening by 1/3. It's small. It's a lot of people don't understand what that is, but any reduction of tightening is kind of, you can make the argument that's a bit of an ease. Now, I think they were worried about 2 things. I think they're worried about the banking sector, but here are the most important things that they're worried about. And we saw elements of it last week, is that long-term US auctions are not being met with the demand that we had hoped. We saw a 5-year and a 7-year on the 28th and 29th of last week that didn't go well. So that's why I think the Fed doesn't want to be selling bonds along with the US Treasury, because of what you said. It's going to be ever increasing. Now we're borrowing money to pay for borrowed money. And once you get into that spiral, it's got to be, the only thing that can happen is austerity. Pause for laughter, because they're not going to have any austerity until the 10-year is about 6%.
Okay. You just got brilliant, of course, as ever. A couple of things. You did point out that the Fed had reduced their buying program a month ago on the FarrCast. That was very important information, that they're actually They have started to slow that a bit. We also know, and this has been, I mean, in the books forever, that the Treasury Department was going to really have a whole lot of issuance coming into June. And it is here. They've got to raise a lot of money. Janet Yellen has to sell a lot of bonds. So this supply is on. The game is on, whether you like it or not. To the 5-year and 7-year, 5 years typically an okay auction. 7 years always a sloppy as hell auction. You never know what's going to happen with the 7-year. I think so. I mean, but yeah, in the broader terms, there's no question but that we've got more supply, more bonds to be sold, and if the Fed continues to sell at the same time that the Treasury Department's trying to sell, that's just a lot of supply. I mean, this is economics 101. There's more supply out there. Demand is only so much demand, and we'll see. And what does it mean? When demand increases, typically they have to pay more for you to get them to for you to borrow their money, right? You're loaning them money. You're loaning them money. To lend them money, the competition is now for your money, right? It is a lender's market when everybody
I'd like to add something to what you're saying, Michael, too, is that for all those of us who are calling a recession for the last year and have been wrong, there's no question we've been wrong. But I don't think any of us thought for a second that they would jack up spending in good times. I'm doing quotation marks for those listening, in good times at the rate that they did. To build up, $1 trillion of debt every 100 days, there is no Keynesian economist on the planet who would suggest that in any other time than a depression. And they did it anyway. So we underestimated their ability. And again, maybe they're right. Maybe this MMT thing works in the end. I don't believe it will.
Oh, it's absurd. I mean, it's absolutely absurd.
It's absurd.
This MMT thing says you borrow all the money you want as long as you keep interest rates at zero. Well, look, folks, they're not at zero.
Amen.
And the other part that was happening was, if the Treasury Department issues it, then the Federal Reserve buys it, and that's how we keep it. Well, the Fed's selling too. So who is that buyer? And what we had set up was one branch of government selling debt and the other branch of government buying the debt with money they were creating out of thin air.
Does that sound like a good system?
Well, it sounds like a great system until the music stops and you don't have a chair.
That's the point. Exactly. Because it has to stop.
John Malden is this perpetual bearish writer, and he's absolutely brilliant. And he's a very entertaining writer. And I read John. I read John in spurts, because after you read 4 John Maldens in a row, you feel like you've read the same thing.
I get it. Yeah.
And I stopped reading it for a while. But in that, he talks about a bang moment. He talks about that moment where everybody's going along and everything's absolutely fine, and we don't care about the debt, and we don't care about the debt, and bang. All of a sudden, everybody cares about the damn debt. And intuitively, Jim, that makes sense. And when I say something intuitively, it's like you, even though, folks, if you could see Iuorio and me on this split screen together, I look like his father. We're the same friggin' age, and I look like his father. And don't think it doesn't piss me off, Iuorio. I'm going to start doing this without video. I really am. I'm going to cut the video from now on, or I'm going to go, I need to start dyeing my hair. Joe Kernan told me.
No, you got this silver fox look. And Art Hogan, it's a good look. I like it.
I don't know. I look like I'm not looking like your father. And I just got back from Naples, Florida, where I actually don't look bad. Naples, Florida. I look pretty good in Naples.
A lot of old people there. We went to St. Petersburg once, and we were in our mid 20s, and everyone was a retiree on the beach. I said to my wife, "Wow, you and I are the best looking people on this whole beach. Let's keep coming here."
Yeah, Rodney Dangerfield said that. He said, "Been putting on some weight. I need to get some fatter friends."
Right? Exactly.
I'm starting to feel bad about that. Yeah. Okay. All right. The United States. To that point, here's a segue for you, Iuorio. The United States is going to need some fatter friends if we keep this up, and they're going to be hard to find. Right now, we've had the strongest economy by GDP numbers and everything else in the world, certainly among the G7. When the debt starts to pile up, it does not make sense, and with stuff doesn't make sense. Farr keeps his money in his pocket. What does Iuorio do?
So this funny what you said is that we need fatter friends, the Rodney Dangerfield thing. So think of the euro and the yen, like this whole dollar index, and that's how we measure the dollar.
Yep.
And those guys are profligate spenders as bad as we are. The Japanese even worse. So we have this illusion of a strong dollar, even though inflation's coming. But in the broad stock market, I am taking some risk off. in commodities, particularly after yesterday, they got hammered, gold, silver, copper, uranium, crude oil. I'm looking for places to increase, not crude oil. Yesterday's movement in crude oil means it needs to find a bottom before I can do that again. But those other metals, I think, are going higher. But also notice the move in Bitcoin. I know a lot of the people who listen to guys like us at our age don't know or understand Bitcoin. I just spoke at a Bitcoin conference last week, and what they have, I believe there's a 10% chance is real as a fiat currency hedge. And Bitcoin's going through the roof. It's probably just a symbol of excess liquidity in the market. Same thing as a meme stock. But if it's not, it means there's a lot of people scrambling to hedge their dollar risk. So I'm go lighter on stocks, particularly tech, and heavier on commodity now.
There's one thing you think about. There are three things I think about when I think about inflation, right? And what Jim is really talking about when he starts talking about commodities and precious metals, he's talking about inflation. He's talking about an inflation hedge. He's talking about stuff that will go up, will go up in price, right? If inflation. And so what part of what he's saying is he doesn't think this inflation is dead. And if you're creating this much debt and throwing this much money into this economy, it's really hard to see how we don't have inflation, or at least stagflation, meaning the economy, if Atlanta Fed is right, and we're getting down to one handle on GDP growth, and inflation stays at north of 3, that's called stagflation. Inflation higher than the rate of growth. You're not moving, but inflation continues to go up. So I think about three things. I think about that rate of inflation, the CPI, the PPI, the PCE. One of those three measures is telling you how the government's measuring inflation. The other thing I think about are the gas station and grocery store bills, because that's how Fred and Ethel measure inflation. And then I think about those commodity prices and how I can protect my money against inflation, because sitting in the drawer, cash loses value by 3.5% a year right now.
Yep.
At the end of a year right now, your $100 in that drawer will buy $96.50 of goods and services at the end of the year if you just leave it alone. So how do you get that cash in your drawer invested in something that's going to go up to keep at least your purchasing power even? Those are the thoughts on inflation. Jim, give me your thoughts on inflation, your final thoughts about where we're going and investing here at the beginning of the end of the second quarter, please. And we got to go.
I think 3.2%-ish inflation is going to be the new normal. I think just based on Social Security payments, union contracts, there is some wage growth that's fueling some of this inflation. That's why I think those commodities will do quite well. I'm not for the tech stocks anymore, and there'll be some good AI stocks in there for sure. That's one of the fads that's not going away. But I think a general rule, they like a disinflationary period. We're going into an inflationary period.
Yeah, those tech stocks like those low interest rates. There's no question about it. We go into an inflationary period that absolutely lends us, I believe, in that recession that's been long awaited. And by the way, we could get away with saying, we haven't been wrong. We're just not wrong yet.
Same thing though, right? Being early is being wrong. Yeah.
There's no question. No question. Market can remain irrational a lot longer than you can remain liquid.
Exactly.
And boy, isn't that the truth? And haven't you found it out over the years? No
Amen.
question. Jim Iuorio is a partner managing director at TJM Institutional Services, the voice of the Chicago Exchange, and my great friend. Oh, and hey, folks, go to Brandt's, Palestine. When you're in Chicago, you got to go to Brandt's. You want the best burger? Go to Brandt's. And you get 10% off your check if you mention the FarrCast.
Just mention the FarrCast.
Drives Iuorio crazy every time I say it.
No one's ever done it, but if they do, I will give them 10% off.
There we go. All right. No, I had a guy who did it. I had a guy who stopped me in Florida and told me that he went to Brandt's because he listened to the FarrCast and they had no idea about the discount. You don't want the burger.
Okay, if I'm there.
We're going to be right back. Please stay with us.
Michael Farr and the FarrCast are proud to support Heroes, Inc. Heroes supports the spouses and children of law enforcement officers and firefighters who gave their lives in the line of duty to the greater Washington, D.C. community. Their singular goal is to honor the supreme sacrifice made by these individuals by caring for their families. Heroes' work begins within 24 hours of the tragic loss and continues indefinitely. We invite you to learn more about Heroes' mission at heroes.org. We hope that you will consider supporting Heroes as they endeavor to honor those who protect us. That's heroes.org. Heroes, here for you, here for good. And now, back to the FarrCast and your host, Michael Farr. Thank you for joining us on the FarrCast. And now, back to your host, Michael Farr.
Welcome back to the FarrCast. I am Michael Farr. Thanks so much for being with us this week. It is the 5th day of June 2024, coming into the end of the second quarter. Terrific segment with Jim Iuorio. We really cast a very broad net, and I think Jim is right. You know, the fact that the Atlanta Fed has gone from a 4-point-something percentage estimate for GDP growth for 2024 down to a 1-point-something, that quickly is a big deal. And Jim thinks that the economy is slowing sufficient to threaten inflation, a real recession at this point. He's even given you a timeline of 2 months. 2 months. I don't see that meeting any definition of a recession, but things could slow. That job openings number now is back where it was pre-pandemic. So the number of job openings is no longer putting pressure on wage inflation. So we would expect wages to stall, inflation to continue at 3.5%, which means, Joe the plumber is really going to feel it at the grocery store. Joe the plumber feels it now, but over the next few months, Joe the plumber feels it more, and Joe will vote Joe's wallet. And somehow, President Biden's team, if he wants to try and claim a good economy here, has to do a much better job of selling, because they've done a lousy job of selling the really kind of pretty good economy we've had so far, but it really might be slowing, and the Fed is sitting on its hands and going to stay sitting on its hands. When we try to understand Washington, Mahaffey's on vacation still this week, but Daryl Owen is one of the best and smartest guys, an insider's insider. He was chief of staff for Bennett Johnson. He ran the House Energy Committee. Wait a minute, Daryl, what was the name of the committee? What was the actual?
It was the Senate Energy and Natural Resources Committee.
Senate Energy and Natural Resources Committee.
Don't accuse me of being a House guy.
No, sorry about that. Yeah, I've just said you were head for Senate. I'm stupid. And now, he's the founder and partner, basically managing partner of Washington lobbying firm Owen, Evans and Ingalls, a Washington insider. You want to meet somebody or get something done in D.C.? He's the guy, and he's really tied. He's originally from Louisiana, and he worked for the senator from Louisiana. So energy is in his blood. Oil is in his blood. You open those veins and you'll find Texas tea, black gold. Jed Clampett would be happy. Daryl, welcome to the FarrCast.
Always nice to be here, Michael. Thank you.
Very glad you're here. We've talked about a lot of things to do with Washington this morning. Give us your first quick overview of the state of Washington this year versus last year. It seems like Mike Johnson is actually able to do some sort of barely bipartisan things, which looks more encouraging. Are you more encouraged by what you're seeing in D.C.?
No. I agree with you that he has gotten a lot done. There's a great irony on all of this. The right wing of the House Republican caucus threw Kevin McCarthy out of the speakership for cutting a deal on spending with the Democrats. Mike Johnson has done easily 5x more than that, and yet he just trounced Marjorie Taylor Greene in her effort to kick him out of the leadership a few weeks ago. Whether Mike will survive beyond this year or not, I don't know, but he has put his perception of the national interest ahead of his own political interest and ahead of his own caucus interest. And he has kept the government funded, and he has managed to get a lot of good things done. And for that, I think he deserves a lot of credit. That's not the same thing as saying that life has changed here in Washington. It's gone back to it's reverted to form.
It's reverted to a form of its form. It's not back to the Tip O'Neill form, but correct?
Yeah, no, form as in a year ago.
You're okay. That's fine. And the chief difference, as has been explained to me from other Washington insiders, the chief difference between McCarthy and Johnson is nobody liked McCarthy. I mean, there were a bunch of people who really hated McCarthy, even his own party, and they didn't have that same level of venom for Johnson, and therefore Johnson, they kind of like Johnson and they let him do it. Does Washington really work that way? Is it that simple, who you like and who you don't like?
In that instance, it was. They didn't like McCarthy, and more than that, they didn't trust McCarthy.
Okay.
Mike got the job because nobody knew him, and those that didn't know him all liked him. I mean, what's to hate about Mike Johnson?
That's how I got into most every club I ever joined. I joined young enough before anybody knew me, and I had a real chance to piss them off. Really, you got to join these places young before they figure out who you are. And I guess Johnson has figured that out. So
as a fellow member of a certain club here in Washington with you, I can confirm that.
Yes, because we got in at the same time, didn't we? I think we got in the same. It's been about 20 years in that club. We're getting close on 20 years here, which is a great blessing. Very nice place to play golf. All right, Dio, you were speaking to a global powerhouse energy infrastructure company this week. Tell us what you said. How did you advise them about a Trump versus Biden victory and what it would mean for their global business environment? And is it going to be harder for them to make money or easier?
Well, the thing I told him with respect to the election is my only prediction, in which I'm confident, is that we're going to be sick of it by the time it actually takes place. Keep in mind, we're still 5 months out.
I'm sick of it now. You cannot be wrong with that. I'm already sick of these guys.
Well, then at the time, this was 6 months out. That's 1/8 of the Biden presidency yet to go. I think that I characterized it as follows. I think the question is almost less Biden's age than his competence. If you go back to shortly after his election, they botched the withdrawal from Afghanistan. His numbers dropped precipitously in the wake of that. The whole border thing, the border has been a problem since I've been in Washington, and it's a challenge to resolve for anyone. But it has escalated under him. That raises questions of competence. There's been a lot of crime in the inner cities, or certainly the perception of it. That raises the question of competence. The school protests over Palestine. There's a perception out there that he's not in control, that he's not governing, he's not keeping things tranquil and peaceful. And I think the age issue is a shorthand for that. Where Trump is concerned,
let me stop you. Is that perception correct? I mean, from a Washington perspective, is that just a bad rap for a guy who's doing a decent job? Who's you can't get around saying that the guy's elderly and looks like, he really ought to have a shawl over his knees and be, sipping lemonade somewhere. I mean, this is an elderly man, no question about that. But is he getting a bad rap on this stuff?
Well, from the standpoint of his agenda, he's been phenomenally successful. He sort of brought an accelerated end to the pandemic. He has passed a tremendous amount of legislation to revitalize American business, whether it's the CHIPS Act or a lot of the environmentally related stuff that he has. He's getting no credit for it, I think, in large measure, because he's not viewed as being in control and not being competent. And he adds to that by, gumming his jello in the Oval Office.
What do you gumming his jello? I love gumming his jello. That's so mean. And I'm actually in Washington now, so I kind of like the mean. But you get something happens to you when you cross the district line. You just get a little bit meaner. I think it just happens. Is he, give us the other, use your insider magic here, the mojo, and tell us, is he really as dottery as our perception is? What are you hearing? There was that article in the Wall Street Journal today that said 45 people who met with him in recent days are all saying they had him mumbling and really a very different person than we heard about 3 years ago.
It almost makes you think that he comes and goes, Michael. I talked to someone not long ago who was in a 2-hour meeting with Biden and a bunch of heavyweight political donors in the state of California. And he indicated that they grilled him, that they really worked him over about how this was all going to work, and said the guy was totally dialed in, answered every one of the questions that were thrown, that he was articulate, that he was attentive. That doesn't mesh well.
We're still talking about Joe Biden?
That doesn't mesh well with the Wall Street Journal article, and it makes you wonder if there's not a little back and forth there with, an aging man. I just don't know.
It doesn't mesh well with what I see, with my own eyes, from his gait to the way he talks now when they show clips of the president recently versus the president when he took office versus a number of years ago, of course. I mean, I'm not seeing the sharp guy who could be grilled about a grilled cheese sandwich and come away looking good. So I guess this debate on the 27th, I mean, it's going to be, I don't know. I got to watch it, but I worry it's going to be like watching a car wreck.
Well, it is, and you're going to be watching it less for the substance than exactly what you say. What kind of shape are both of these guys in? Trump's got a vocabulary of about 160 words, and is he going to be able to go beyond that? Is Biden going to be cogent at all? Is he going to be lucid? I don't know. I saw a clip from the debates with Trump almost 4 years ago, and you're right. It's a totally different guy than you see in front of a TV screen right now. The president is just almost feeble compared to what he was then. Does that mean that he's lost it? That's a little bit of a jump. I don't.
And does it become a big enough of it? Can it become a big enough issue that it'll make a difference prior to the convention? I have heard for almost every election that I can think back to that there's going to be some surprise thing. I even remember when they were saying it about George Bush 41, that actually there's going to be an acclamation from the floor that Barbara Bush should really be the candidate. Do you remember those that really said because Barbara Bush could get elected in the Republican side and nobody else? I mean, there are always these things and they never happen. Is there any chance that we don't have Joe Biden as the Democratic nominee or Donald Trump as the Republican nominee?
I think it's infinitesimally small, and I think it would depend on two things. One is a catastrophic performance in the upcoming debate by Biden, and I think that's possible. And the other would be Michelle Obama willing to step in as the Democratic candidate. I think she is the only person who can conceivably step in as the candidate and manage the Kamala Harris issue that the Democrats have created for themselves. I don't think anyone thinks Kamala Harris is ready to be president of the United States. I certainly don't. And but you've got to manage the politics of pushing her aside very, very carefully. And I think Michelle is the only person that can pull that off.
Well, and of course, it's always the same narrative, by the way. You bring in the outside person and you make the current vice president a Supreme Court nominee. You nominate him for the Supreme Court. She is a lawyer, and you get him out of the way with a lifetime appointment over on the court and something prestigious and dignified. And I don't know how in the hell she'd get through confirmation, but that's not the new president's problem. There was a great meme, Daryl, that I saw yesterday. I'm not being political about this, folks. Just laugh with me on something that's funny. But if you remember Columbo, if you're old enough to remember Columbo, he was the guy who'd ask one more question, his big gotcha question. He wore the frumpy raincoat, and he'd have one more question walking out the door of the crime scene that would get you. And here it was, just one more thing, sir. You never met her. Don't know her. But you paid her $130,000 to keep quiet about something you never did. Is that right? Okay, that's the whole trial. one line. How you got from the string to end up with these convicted felon was a stretch that worked. I guess a legal stretch that worked. Do you agree that was a legal stretch, Daryl? you're on the left side of the aisle. You worked for a Democratic senator from Louisiana. Was it a stretch legally to do what they did?
Well, I work for a conservative Southern Democrat who has indicated he couldn't be a member of either one of these parties right now. And I share that.
I couldn't either. I'm an independent. I can't be a member of either one of them.
Absolutely. It's an extraordinary leap. It's a handful of misdemeanor accounting violations and record-keeping violations that are assembled into this grand theory that it was done to violate federal election law, and therefore it's a felony in the state of New York. And maybe that's the way the code reads in the state of New York, but it seems to be an incredible stretch to me. I am no fan of Donald Trump, but I'm also not a fan of this particular prosecution. I think it borders on absurd to prosecute a former president for something that is this minor and hard to justify.
So Kathy Hochul is the governor of New York, right? And have you heard this theory that she should pardon Trump right now? She should pardon Trump on all counts so that he cannot play the victim here, move it along, still convicted, a pardoned convicted felon, but move it along and not let him, have this bully pulpit any further. I don't think it'll ever happen, but I love the idea. Do you like it?
It would be merciful to all the rest of us just to get this off the front page of the paper.
I just think it would be brilliant. I think it would be brilliant for the Democratic Party, and she's a Democrat. So I think it would be brilliant for the Democratic Party to have her pardon and get this moving on and basically remove that plank that it's the whole witch hunt thing. All right, Daryl, a more difficult business environment or not? We gotta go, but I'd love your opinion there. What did you tell this big global organization?
Well, I indicated that I didn't think, regardless of who's president, you're going to see significant permitting reform anytime soon. The quest for revenue in 2025 is going to be relentless. The Trump tax cuts expire. That's $4 trillion worth of tax cuts. The Congress and all the candidates have said we're not going to raise taxes on people who make $400,000 or less. We're not going to touch Medicare or Social Security. We're going to increase defense spending, and somewhere you're going to have to come up with some revenue to cover all of that, or you're just going to add $4 trillion to the national debt. And the only place to go is wealthy people and corporations. And I think both are going to be under assault. I think capital gains and step up in basis are all going to get called into question for the wealthy, and that's more of a political gesture than it is a revenue generator. But I think the hard look is going to be taken at corporate tax rates,
okay,
and corporate tax breaks. And I think the industry really needs to gird itself for that. And I think that's the case whether it's Trump or Biden.
Final question. You're an energy policy expert. The demand for energy in this country, what's your forecast over the next few years? Demand for energy and pressure on energy prices.
Electricity demand is going to skyrocket, and it's going to be a challenge to meet it, less from the standpoint of generating it than to get it where it needs to go. But it's been relatively stable and tranquil for the last decade or so. It's getting ready to escalate more than 1% a year, which, when you look at the size of this country, is a lot of electric power. And the build out of everything from data centers to a lot of the facilities that are supported under the Inflation Reduction Act, all of the climate related facilities, is going to require a tremendous amount of electricity. Oil prices, I continue to be a modest bull on prices. I know they're sort of wallowing around right now. There's some curious things that came out of the OPEC meeting. But I think oil prices will firm and probably gently rise over the next 4 years. But electricity is going to be the real challenge to really getting this economy where everyone says they want it to go.
Daryl Owen, managing partner, founder of Owen, Evans & Ingalls.
a Washington, D.C. advocacy firm, that means lobbyist, who will get it done. You need to get it done in D.C., you call my friend D.O. That's just what you do. Daryl, thank you for being with us. Ladies and gentlemen, that's it for another FarrCast as we cover Wall Street, Washington, and the world. We'll be back again next week and try and figure out what that's going to mean for markets. Markets are still kind of expensive, but we're seeing some cracks here, some cracks in this tech-led rally. So be cautious, be careful, be aware. Do not be complacent. Complacency will get you, and so will emotion. Stick with your plan. For Hightower Advisors, Farr, Miller, in Washington, my producer, Harry Jennings, thanks for listening and watching. We appreciate it a whole lot. We'll see you next week. In Washington, D.C., I'm Michael Farr.
Thanks for being with us on this special summer edition of the FarrCast. Thanks to our guests, Jim Iuorio and Daryl Owen. The FarrCast is produced by Michael Farr and Harry Jennings and comes to you weekly for free on all major podcast platforms, including Spotify, TuneIn, and Apple Podcasts. You can stream past episodes as well as subscribe so you never miss a new one. Please be aware that anytime we or any of our guests mention a specific company, sector, or refer to performance in relation to an earnings report, news headline, or economic trend, it is not a recommendation to buy or sell. Review the risks and rewards of any investment with your financial advisor for what specific investment and general strategy is appropriate for you before you make any investment decision. And as always, we can be of assistance at Farr, Miller in Washington. Please reach out to me at hjennings@farrmiller.com. We are here to help, and I am happy to arrange for any of our listeners an appointment with one of our financial professionals to review your portfolio, your needs, and your goals. As we continue into the summer, we will look to bring you weekly updates on the evolving markets, economy, and world, and try to explain more of the investment universe. Take care, stay safe, and stay healthy. Thanks for listening to the FarrCast. Wall Street, Washington, and the world. Farr, Miller in Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, an SEC-registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors, LLC. Securities are offered through Hightower Securities, LLC. All information referenced herein is from sources believed to be reliable. Farr, Miller in Washington and Hightower Advisors, LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr, Miller in Washington and Hightower Advisors, LLC and any of its affiliates make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions or results obtained from the use of this information. Farr, Miller in Washington and Hightower Advisors, LLC and any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and the materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors, LLC or any of its affiliates. Farr, Miller in Washington and Hightower Advisors, LLC or any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented in any way to any entity as tax or legal advice. Clients are urged to consult their tax and or legal advisors for related questions.